Nifty going strong, staying above the 23,300 mark as we speak. But what is the kind of move that we can see sectorally? Is this going to be a nifty large cap kind of a rally that we see moving ahead? To speak more on this, I'm joined now by Venkatesh Balasubramaniam. He's Managing Director and Co-Head of Research at JM Financial. Venkat, thank you so much for speaking with us. Absolute pleasure and great day to have you on. I'm going to start with your nifty targets because the report that we're referring to was also before a lot of factors in the last few days, and that's bound to happen because everything is changing so quickly. So let's start with your take on what the latest is and ease on tariffs. Overall, pause on tariffs, then on semiconductors and mobile phones, etc., then on auto as well. As we stand, has the fear of tariffs reduced and receded?
Thank you for having me on your show. Now, on tariffs, it's almost like the news cycle has reduced to maybe less than a day. What is true yesterday is not true today.
True.
So that is the speed at which things are moving.
Yeah.
I mean, we started out with reciprocal tariffs. We started out with base level tariffs of 10% on almost everything imported into the US. This started from April 5th. Then you had on April 9th, the reciprocal tariffs kicked in. You also saw a bond market sell-off in the US, which might have made the US administration jittery. So immediately what you saw was they climbed down on two particular issues. One was they deferred tariffs by almost 90 days. Secondly, they climbed down on semiconductor tariffs. But interestingly, on Sunday, that is on Sunday evening, Trump also tweeted that, I have not actually removed tariffs on semiconductors. What we have done we have moved it to a separate bucket. There was also mentioned that sector-specific tariffs would be implemented going forward. So it is not very clear at this point in time what is the end game. I think it is a little too early to start celebrating the fact that there won't be tariffs. We still believe that you need to the dust is yet to settle down. So you need a little more time to figure out what exactly is happening, because things are changing almost like on a daily basis, things are changing.
Right. So, Venkat, I understand from a tariff perspective, things are changing. Now, if you have to talk about your report with regards to Nifty 50 Analyzer, where you've spoken about the Nifty 50 EPS movements that have happened in February. In fact, a cut of almost 5 tenths or 9 tenths of a percent in EPS over FY25 to 27 estimates. Anything changes on that front in terms of your estimates since the time you've written the report, taking the market conditions into consideration?
Yeah. So if you look at numbers, if you look at Nifty numbers, first 9 months, I think we saw something like 7 to 8% kind of EPS growth. And we were earlier expecting that EPS growth for the full year will grow between 4 to 5%, which implied that the asking rate for the fourth quarter was close to 3% kind of growth. Interestingly, our team has come out with the estimates for the full quarter now. We are expecting that Nifty EPS will get cut by around 2%. So first of all, we don't think the 4 to 5% growth for FY25 is going to be achieved, which basically means that numbers will be revised down for FY25. Incidentally, we have also done some amount of proprietary analysis to figure out whether our estimates of 16% growth on the Nifty for FY26 can be achieved. When we did this proprietary analysis, we realized that almost 35% of the JM Financial coverage universe companies, we are going to see estimates being revised down. So at this point in time, my best guess is for FY26 also, it is very hard to see EPS growth more than 8 to 10%. So on the number side, things do not look that good at this point in time.
Okay. So Venkat, when you're saying EPS cut in terms of FY26 is what you're seeing as well. Now, which are the sectors which will see the highest cut from here on, and what are the factors one should be watching out for?
So if you look at EPS cuts per se, you could potentially see cuts in IT, you could see cuts in auto ancillaries, So these would be the IT, auto ancillaries are the key sectors where we are going to see cuts. We could also see some amount of cuts in when it comes to chemicals. We are going to see some amount of cuts in industrials. So it is almost like a broad-based kind of a cut. At this point in time, we are worried about uh, banks also because while the liquidity has come back in the month of April, if you have rate cuts, we've had 2 rounds of rate cuts. If there are more rate cuts, aggressive rate cuts during the year, you have to remember that the loan book is linked to the repo rate. So there could be a risk, but we are not calling out the risk on banks at this point in time. At this point in time, for FY26, the bigger risk emanates from IT, auto ancillaries, chemicals.
Venkatesh, just want to drill down a bit on your point on banks. Why are you feeling a little concerned, or are you saying banks could be risky at this point? You're in a interest rate scenario where you will see interest rates consistently coming down. Yes, we'll have a tough quarter perhaps, but the outlook on banks seems to have turned pretty positive, especially if you want to pick domestic stories.
No, we really like banks, but see, look at it this way. Fourth quarter will not be a great quarter for banks because loan growth has slowed down. So you're also seeing CASA growth has slowed down. Uh, Credit costs are going to be higher. So you are going to see a NIM compression in the fourth quarter. Now, as I already mentioned, that from April, liquidity has improved. So things look much better, and also risk weight of bank lending to NBFCs has been changed by the RBI. So which is a positive both from the perspective of growth of the loan book and also from the perspective of the NIM. But on the flip side, you are also seeing rate cuts. Now, we have already seen 2 rounds of rate cuts, each of 25 bips. There can potentially be some amount of adjustment down. It will not be a meaningful cut when it comes to FY26 numbers, but there could be small amount of cuts. We are not negative on banks. We are negative about the particular quarter, but our outlook for the next year is quite positive on banks. We continue to like Axis Bank, ICICI Bank, and SBI. These would be our 3 picks in the banking side.
No, sure, and I completely agree with you. It's going to be a tough quarter, Venkatesh. My question is that would that pain not have been priced in already? Has the street moved ahead of it?
Yeah, you could see what happens is we are not in a very, very bullish market. So if numbers miss, you could see some amount of corrections. So yes, to some extent it is priced in, but with global uncertainties, whether with problems in the Indian market, it is not that clear that everything is hunky-dory at this point in time. Largely priced in, but let us wait and watch.
Okay. So again, a wait and watch with regards to where banks go. Venkatesh, in terms of other sectors, you spoke about how you're looking at auto. How are you looking at the export-oriented sectors in terms of outlook? If you have to see IT, pharma, because these are the ones where there are concerns and there is uncertainty as well.
Okay. See, IT per se, there is no concern on tariffs. But if tariffs actually play out, you could see a slowdown in the US economy. If there is a slowdown in the US economy, there is going to be a slowdown when it comes to IT services. So we are already expecting earnings cuts for the next year. Secondly, valuations in IT are not cheap. Still trading almost greater than one standard deviation above the mean. So not the best sector to be overweight on at this point in time on IT. Now moving on to auto and auto components. See, domestically, we are better off with domestic focused companies, the likes of maybe a Maruti. We still worry about the export oriented companies. The likes of Tata Motors and the auto component companies which are exporting to the US, because we are not sure that we still have clarity on tariffs. So tariff remains a very big risk when it comes to the exporters. On the domestic side, obviously, this quarter is not going to be that great. Auto component broadly, that universe, we are not expecting more than 5 to 6% growth. We are a little bit worried on commodity prices in the current quarter. Of course, commodity prices might come off next year because of tariffs if global growth slows down. And interestingly, on the domestic side, the income tax cut in the budget will start kicking in from the month of April, which should be positive for consumption. So perhaps there is a possibility that domestic focused auto might actually do much better next year. I think there was one more sector which you mentioned, pharma. See, again, pharma, like I said, the news cycle has shortened so much. It's like on almost like on a daily basis, things are fluctuating up and down. You saw the US markets go up and then collapse. So when the first round of 90-day deferral turned out to be wrong, similarly, on pharma, we thought there will be no tariffs, but then Trump came out with a tweet on Truth Social saying that pharma will see tariffs at levels not seen before. So when you don't have clarity, what exactly do you do? So that is so when you don't have
Have you
clarity,
opened your Truth Social account yet to track Trump?
yeah, I do have a Truth Social account where I do follow Donald Trump.
You're only one person in your
Yeah,
follow
yeah,
list is Donald
yeah.
Trump. I think that's true for a lot of people. I'm just wondering that if, and you talked about how the domestic consumption or the domestic play is the important one, and I'm wondering if consumption makes a case there. If there is a case for consumption, would you like an Eternal right now? Do you like a Nestle and HUL? What are you factoring in when it comes to the consumption story, and how you would look at that space?
Okay, let me put it this way. My way of thinking is a little bit olden style. I like stocks which make sense on PE multiples. So while I understand our internet analyst really likes Eternal, but it is not something that would be a part of our top 10 picks because personally I like companies which make sense on multiples, don't trade at more than 25-30 times 1 or 2 years forward. So what we are basically looking at is basically what we prefer at this point in time on the consumption side would be something like Varun Beverages. We like Maruti. We like other domestic plays which might not be consumption related, but it is almost like it is a staple. I mean, telecom is a staple. So we like Bharti. So that is something we like. I already had mentioned the three banking stocks which we like, which is Axis, ICICI, and SBI. We still like RIL. We think also we really like the cement sector at this point in time because month on month we've seen like a 2.5% kind of pricing increase. So we believe operating leverage will play out. So there we really like Ultratech. We like some of the real estate names like DLF. So these are some of the picks which we like.
Right. Venkatesh, you also mentioned about the commodity cycle, right? Taking into consideration the way bond movements happening in the US as well as the dollar index. How are you viewing the oil and gas space as well as the metal space? What's your expectation?
See, clearly there is a problem when it comes to crude oil prices, which is a very big positive for India. I mean, India is hugely dependent on crude oil. Crude oil prices coming down means we're very, very positive on we remain positive on some of the oil marketing companies because we believe refining margins will be strong. So that is one play which is which one can think about. You could possibly even think about something like Indigo because I think this year Indigo will report very good results with oil prices coming down. So these are two names which we like. Uh, Commodity prices, again, see, commodity prices will remain weak this year. There are uncertainties globally. So commodity prices should start coming off. At least over the next 6 to 9 months, this should come off. So we still need to, again, commodities at this point in time, we are not suggesting anything in commodities because we are a little worried. If global growth comes down, commodity prices could come down.
You spoke a while ago about Maruti. Venkatesh, I'm wondering how you're feeling about Tata Motors. Today, of course, the tariff relief or the expected tariff relief is pushing up the stock, but on a comparative basis, is Maruti the best pick, or do you have a view on M&M Tata Motors as well?
Are we sure that the tariff relief has come and things will not change in the next week or so? That is the problem.
We're not sure.
So I suggest something and tomorrow Trump tweets something new. Whole thing changes on its head. So I would be a little careful. Wherever stocks can get impacted with tariffs, I would suggest investors wait till the end of April. Don't be in a hurry to buy into these stocks with every tweet and every little thing happening. It will take another maybe till the end of April or mid-May for things to start settling down before you can take a call on some of these stocks.
Thank you so much. Venkatesh, for speaking with us and completely, very honestly, without any dressing, telling us how it is. And yeah, I suppose find companies which could be relatively Trump-proof. I won't even say tariff-proof, and that would be a winning game. Today is a good day, though. Thank you so much.